Hey everyone, Stephanie Smith here from New Light Financial Solutions, where we help entrepreneurs unlock more cash, profit, and peace of mind in their business. And we do this by fixing the top financial drivers that are holding them back. In this video, I'm going to show you another example of how we helped a client set targets to meet their personal goals. And their goal was to work less in the business and get paid the same amount that they were getting before. They're not quite ready for retirement, but just ready to taking a step back. And this particular business is an e-commerce business, just to give you an idea of the industry. But before we dive in, I'm going to caveat and say that I'm going to talk about a lot of numbers, but my goal, as always, is to simplify things, to make it easy to follow, so you feel confident about doing something similar in your business. So let's dive in. So where we start when we go through this process is by looking at last year's actuals. The best way to set a target for this year is by looking at what happened last year. So instead of you watching me plug in all these numbers, I'm going to do it real quick. And here are the numbers for last year, and I'm going to talk through each of these. And we start with the revenue drivers and the revenue formula. So in this particular business, again, an e-commerce business, they had 3,900 leads, and leads are the people who have come to know about you through your marketing efforts. For him, these leads are going to be people that came to the website. Of those leads, he had a 5% conversion rate. So of all the people that came to his website, 5% of them actually made a purchase. So if we take our leads and we multiply it by our conversion rate, that's going to get us the number of new customers who have purchased from us this year. Then we also want to look at how many customers who have purchased from us in the past who have come back and purchased with us again. So the previous year he had 367 customers, and 26% of those customers came back and made another purchase. So 376 times the 26% retention rate, which is another driver that we look at, is 95 total retained customers. So now we want to find out the total customers for the year. We're going to take the 195 new customers plus the 95 retained customers for a total number of 290 customers. From here, we're going to take that number of customers and multiply it by another driver that we look at, which is purchase frequency rate. This is how often the person is purchasing from you throughout that particular year. So in this particular business, he has a handful of clients that buy multiple times, but most people buy once, and it averaged out to 1.6 times. So the 290 times 1.6 gives us 465 total transactions for the year. And what we're going to do with the total transactions is multiply it by our last revenue driver, which is $2,700 for him. It's the average purchase value. So the average purchase value is how much people are spending with you for each transaction on average. So he does have some customers that spend a lot of money and some customers that spend not as much, and it averages out to $2,700 per transaction. So if we take the total number of transactions, multiply by the 2,700, he's at 1.2 million, which is amazing. This client does very well in his business, and you'll see that as we move along. Next, we're going to look at the profit drivers and the profit formula. So taking that total revenue, we're going to look at our first driver, which is cost of sales. So cost of sales is going to be the amount of money it takes for you to actually produce or provide that product or service. So in his case, it's $300,000, which is 23.9% of revenue. So we like to look at this as a percentage of revenue. And to find your gross profit, you would take your total revenue minus your cost of sales, which gives you your gross profit. And his situation, it's almost $1 million, which is great. The next driver that we look at for profit is payroll expenses. He is not on payroll, but he takes all of his payroll out through a draw. So there's no payroll expenses, and he doesn't have any other staff. The second biggest expense that we look at from the profit side is marketing. And in his case, he doesn't actually do a lot of marketing. He has a kind of a niche product, and people are just searching for him online, and he doesn't have to spend a lot on ads. So his marketing expense here is $200. And finally, we look at the rest of the overhead expenses. So this is everything else that you pay for to run your business. It could be rent, utilities, software, all the things that you use to run your business. So in his case, it's $280,000, which is about 22% of his revenue. And if we take our gross profit and subtract out all of our expenses, we're going to end up with our net profit. So in his situation, it's $674,000, which is about 53% of his total revenue, which is amazing. So we start with 1.2 million in revenue, and we have 674,000 in net profit. From here, we're going to look at the cash flow drivers. So these are all the other things beyond revenue and expenses that impact your actual cash flow. And we're going to look at, the first one would be your accounts receivable. So when you send an invoice, if your customer doesn't pay you, then you have an amount in your accounts receivable. And as you send more invoices, your accounts receivable goes up, and as people pay them, it goes down. So in this particular situation, over the course of the year, he recouped $10,000 in his accounts receivable. So his accounts receivable went down $10,000. The next driver we look at is inventory. So if you do have inventory, that's going to affect your cash flow as you buy and sell inventory. He doesn't have inventory on hand, so that's not an issue. The next would be assets. So as you buy and sell assets like a truck or a property, that would fall into this category, and that obviously impacts your cash flow as you are spending and receiving money from that. He doesn't have any assets that he's purchased or sold, so this is zero for him. The next driver is debt. So when you take out a loan or you pay back those loans, that impacts your cash flow based on what you're doing in your business. He doesn't have any loans, and he's not taking out any loans or paying back loans. So this is zero in his case. The biggest drivers for him are owner's draws and owner's investment. So this is how much you're taking out of the business for yourself and how much you're putting back in. Like I mentioned before, since he doesn't take out payroll, he takes out draws. He takes out a lot of draws. So he paid himself $740,000 last year, which is great. He did invest $30,000 back into the business, but his take-home pay was that $740,000. When you take your net profit and you add and subtract all of the numbers in the cash flow drivers, then that will give you your cash flow. So his actual cash flow is negative because of the amount of owner's draw he took out was more than his net profit. And what we do with this number, and we like to look at, is if you look at your beginning bank balance, which was for him was $35,000, and you reduce it or add in the amount of cash flow. So his was reduced by $25,000. He had about $10,000 in the bank last year. So he made a lot of money. He was at 1.2 million. He paid himself a lot, which was amazing. But at the end of the year, he only had $10,000 in the bank for the business. That's not a bad thing. It's positive. Our goal that we help our clients with is consistent positive cash flow. It just depends on the goals of your business. So now that we know what happened last year, our next step is to set targets for this year to meet the goals. So the goals that we know he has is he wants to work less and he wants to get paid the same. So where I like to start is plugging in that particular information to meet the goals. So we know that he wants to get paid the same. So his owner draws is going to remain the same at $740,000. And then we had a conversation about what would it take to replace himself in the business so he can step back. And we discussed adding in an additional $150,000 to hire some contractors to do the work. So right out of the gate, you can see the impact to the cash flow. We are very negative. But of course, we haven't plugged in any other numbers, so that's why this looks really bad. So what I like to do next is plug in the same numbers as last year into the targets so we can get an idea as if we don't change anything else, what's going to happen. So I'm going to do that now. Okay, now that we have the same numbers plugged in from last year into this year, you can see that our cash flow is very negative and the ending bank balance is negative. And that's simply because we took out more in our cost of sales. So our cash flow is negative as well. So what we're going to do is go backwards through everything and figure out what we need to change to make sure that this is not negative, because we want to make sure there's money in the bank at the end of the year. So I'm going to start with the cash flow drivers, and we know he told us that he wasn't planning on adding any more money into the business. So I'm going to remove this owner's investment. And we also talked about him, instead of just recouping $10,000 worth of accounts receivable, he's going to aim for more than that. So his goal is to get $30,000 throughout the year. So he has quite a bit of accounts receivable, and we want to reduce that amount. So this is going to be one of the goals that we work on. That didn't help our cash flow significantly, so we still need to recoup money elsewhere. If we keep going backwards, we had a conversation around his overhead expenses. Are those going to change? He said, no, we're going to leave them alone. We're going to leave marketing the same for right now as part of this conversation. He's not going to take on payroll, so we're going to leave that alone. We've already changed our cost of sales. So right now, the profit drivers, we're just going to leave alone. Now let's go and look at the revenue drivers. Looking at the revenue drivers, you can see that even if we keep all the numbers the same, his total revenue is actually less this year with the targets than the previous year's actuals. And the reason for that is the total past customers. He had 367 past customers the year before last. And then only 26% of them purchased, so he had 95 retained customers. So the total customers is 290. So the total past customers for this year actually reduced from the total past customers. And that makes the total revenue go down. So this is definitely a red flag and something we need to watch. And I actually know the reason why for him. He acquired a very large customer who is making very large purchases. So he wasn't really worried about getting new customers because this one customer was sustaining him. But we know we need more money. And if we work our way back up, the average purchase value is probably not going to change. It's going to be the same, stay the same. People are buying the same kind of things. The purchase frequency rate, again, it's going to stay the same. It's not likely that people are going to come back and purchase. We're going to be hopeful that the retention rate is the same and our conversion rate is the same. So knowing that we need more money in the business, where we're at this point is he needs more leads. And this is actually a great conversation because he isn't spending a whole lot on marketing. Last year, he only spent $200. So this year we talked to him, what if we put in some money into your marketing so we can get more leads and then we can get more people to your business spending money with you. So we said, let's start small, right? So even if we did $1,000 a month in marketing, that does, again, decrease our cash flow because we're spending money, but we know that that will generate more leads. So let's see what we can go after from a leads perspective. And if I spend $1,000 a month, how many leads do you think that would give me? And if I add in just 1,600 more leads and I make this 5,500, you can see that gives me a positive cash flow. So that's amazing. So hopefully if we are doing some marketing, we can get some more leads. All we need is some more leads with this same conversion rate. But I do want to point out that maybe he didn't believe he could get that number of leads, and maybe it was only like 1,000 leads more. And instead, we also worked on conversion rate. So if we could increase this conversion rate from 5% to 6% to get those people who are landing on our website to purchase more, then look at what it did to the numbers. With the 5% conversion rate, just 1,000 more leads was not enough. We still have a negative cash flow and negative money in the bank. So that wasn't going to work. But if we change that 1% from 5% to 6%, you can see it went all the way up to a positive 144,000 and a positive 153,000. So where we ended up landing with him was we did decide to keep it at the 5,500 with the 5% conversion rate. And we're going to watch his leads and his marketing as it comes in. And throughout the year, we'll make adjustments and see if we also need to work on the conversion rate. And from there, we will adjust month to month to make sure we're meeting his goals. But you can see here that we made just a couple small changes. We added to our cost of sales, which wasn't a reduction. That just means we're hiring more. We're going to do more marketing, and then we're going to work on our number of leads and our conversion rate. And then in doing these things, he's able to take a step out of the business and spend his time doing whatever he wants, getting paid the same amount he was getting before. So I love this example because it shows that a couple of small changes in your business can make such a big impact and can help you meet your goals. So if you're in this situation and maybe you're thinking, I would love to work less in my business, but I'm not sure I could afford it, I want you to know that it's possible, and we help our clients do this just like this particular client. If this is something you're interested in doing, we would love to talk to you. I'm going to put a link in the description box where you can book a call with us to learn more. And if you want to see some other examples of how we've helped clients meet other goals in other industries, I encourage you to check out my other videos. Until then, thanks for watching.